It is Good Friday. Markets are quiet today, but we'll take a quick look at things in the Forex market. Hello, everyone. Futures Brizio here. It is 11:30 a.m. on Friday, April 3rd, 2026. Good Friday. So I hope everybody's doing well. Make sure you smash that like button, subscribe to the channel, questions, comments, leave them down below, and we'll just jump right in. So the futures market is closed today. After the close yesterday afternoon. That was it. So I did mention the video yesterday that I had this corn trade. So this is just going to sit here. I thought we were going to have an overnight session, and then just there wasn't going to be any North American session on the CME today, but I was wrong. So that's fine. So this trade's just going to sit here. The market will reopen on Sunday night, and then we'll see what's going on. So we're not going to talk about futures at all because there's nothing going on in these markets being closed. So the forex market is open today. We did have NFP this morning. I can refresh this. I think the report was pretty good. Yeah, average hourly earnings actually fell a little bit less than expected, but the actual job numbers was about what? That's about almost three times what they had projected, which was quite a jump from last month. Almost you know yeah, a huge jump. It was minus 133,000, ended up at plus 178,000, and the unemployment rate ticked down 0.1%, so that's good. Um, and unemployment claims in general yesterday were a little bit lower than expected. Okay, so that was kind of the news today that kind of based some of the movement. And so if we look at some of the charts now, so I mentioned yesterday on the video about using the CSI on higher time frames. So we looked at the daily chart. I've talked about the daily, the 12-hour. I've talked about using it on a 4-hour chart. And then yesterday I made a video talking about using it on a weekly chart. And I can leave a link to that down below if you want to check that out. And I can also leave another link to the CSI indicator video that I made, I think about a week or so ago, that just dives into a little bit more about what this indicator is. And this is not an indicator you'll find straight up like this on TradingView. Again, I took a publicly available one and just had it recoded to be a little bit more user friendly and usable to me. And so that's what you see here. So again, I talked about using the weekly chart, but again, that's a very slow time frame. These lines will only update once a week, and so you're gonna have to sit on your hands a lot. And you could potentially on any given market, any given pair, not have a trade on any given pair for weeks, months, maybe longer, because you're just not going to get that many. But this indicator will quiet down the longer you go out on time frame. So if you're worried about over trading, or you just don't really have time to look at charts, but even on the daily chart, you only have to look at it really once or twice a day. But even if you don't want to do that, you could go to the weekly chart, or you could, if you're using something like TradingView or another platform where you can create custom time lengths, you can create other ones. And I talked about yesterday using like a 3-day or a 4-day, something in between, a little bit longer than a daily, but a little bit faster updating than a weekly chart, which might be important because, the weekly chart could give you potentially some late entries on a fast moving market if you're waiting for that candle to update. Now, I also mentioned that one way that you can potentially accommodate some of that slowness of the weekly chart is to turn on the live data feed on the indicator, which basically allows these lines, the right-hand edge of the indicator, to adjust in real time as price is adjusting. And so if it looks like maybe there's a crossover starting to happen, or or a deflection where the two lines come together and then divert off of each other, you don't necessarily have to wait for the weekly candle to close and see where if those lines do end up diverging or crossing over. But of course, the risk to that, like I mentioned, is that um, you could have a crossover, let's say, where the two lines are starting to cross like this, in real time. You turn on the live feed on the weekly chart, and then all of a sudden, by the time the candle closes for the week, that crossover has reversed, and now that it's gone back to whatever it was doing before, and you could potentially be stuck in a losing trade because you didn't wait for the candle close. So a lot of people say wait for the candle close. It's a very common thing on any system, strategy, indicator. Even if you're just using price action, I would say wait for the candle to close, whether it's on a 1 minute time frame or a 1 week time frame. But this data feed is one way that you can speed up. And if you really feel strongly about that trade, this can give you a little bit of a glimpse of whether that trade is heading in that potential direction of what you think by having the live data feed. But again, there is a little bit of risk in that. So that's something you have to decide. As far as the length, I still have this set at 14, and I still find that anywhere between 10 and 14 is a good look back period, regardless of time frame. So I'm just leaving it at 14 for now. I don't really see a big difference lowering it down. That actually just makes the chart more busy. Uh, and so, for now, I'm just leaving it at 14. Uh, but if you look just for an example, so let's look here if you look at the extreme right hand edge of this line right now at the top here where my crosshair is. All right, and I'm going to turn on the live feed and just watch how those change. Okay, and you can see in this case not a big change because they're pretty well separated now. This still to me just still shows a bearish trend in this particular market, which is the New Zealand versus the US dollar. And you can see, and this is a 3-day chart, by the way. So if we look at this crossover, we had this bearish crossover that happened back here. This is where the lines actually crossed on this time frame. And so we've been going down for, remember, each one of these candles is 3 days. So that's 1, 2, 3, 4, 5, 6 times 3. This is 18 days. So this is more than 3 trading weeks right here from the signal to where price currently is. So people say, well, this is a really late signal. Like this is if you waited for this candle to close, but remember, this is a 3-day chart. So, let's see how many pips that is from where this candle closed down to where price is right now is 165 pips. Okay. And, your signal's not always going to be that late. If we go, so let's mark this off because one thing I wanted to show just for comparisons, we're going to mark off. So there's the signal on the 3-day chart. If we go to the 4-day, let's just look at some different time frames. The chart gets a little more messy just because of the look back period, because of the time frame. But it's still pretty much the same candle, trigger candle. And even on the weekly chart, it's still basically the same trigger candle. So, and if we go to the daily, the signal is definitely a little sooner. So it's right here. So that's like the close of this candle, okay, as opposed to, we have to adjust this because we're now on a daily chart. So if we go back to the 3-day, let's see, what's the actual date on this candle? This was March 10th. All right, so go back to the daily because I got to move this line. March 10th. That was the start of that. So that was the start. So that's 1, 2, 3. So it's basically like right here. All right. So this was the difference. So here was your close right here on this daily trigger was right here where my pointer is. This was the trigger on the 3-day chart. All right. So yeah, it is, you did leave a little bit on the table, but it's not a huge amount. And again, these are long-term trades. So you have to keep that in mind. So it's a difference of about 82 pips. Now people are going to say, look, 82 pips is a lot of pips. And it is, especially if you have a big position on, or if you have a small account. 82 pips is a lot. But again, you got to remember you're holding these trades potentially for weeks at a time. So at the end of the day, if you're a little bit late getting in, that's going to be pretty common on a higher time frame because it is so slow. That price can already be moving, especially when you're using an indicator based strategy to help you with that signal. And so the signal again on the daily chart comes here. Um, I could create a 2-day chart. All right. I mean, you can just create whatever you want, and whatever, and you might have to play around with it. If I create like a 2-day chart now, so let's again look at this signal on a 2-day chart. Let's see if we can get a similar signal, but a little bit cleaner chart. So we got to wait for this to update. So here's the 2-day, and it's pretty much at the same time frame right here. All right, it's pretty much at the same spot. So I mean, the 3-day is still the cleanest, in terms of just, cleaning that up. And you can see this is a much smoother, obvious entry, but it does get you in about 3 days late uh, into the party. And you did lose, leave some pips on the table. So that's risk reward. And of course, it's going to be different in any chart we look at. Um, you might have one on the daily chart where it's super smooth, obvious entry, and you go to the 3-day and it's not as obvious. So because again, you're looking at the time frame is going to, create a different calculation of these lines because you're looking at a different set of candles of price action that the indicator is calculating against. So, if you have a 14-day look back on a daily chart, you're looking at 14 days, it's looking back. If you're looking at 14 period look back on a 3-day chart, then you're looking at 42 days of price action. So the indicator can be quite different. And so that's kind of the plus and minus you have to weigh in terms of what where you want to go with this. So, but at the end of the day, there's still good signals, and because you're on a higher time frame, these are trades you're probably going to hold a while, anyways. And if you were in this trade, I mean, you're going to be safe to trade at least probably back to this swing low down here, you know, um, as at least a somewhat of a target. And so if price makes it there, let's say you have a TP sitting at this level, let's just say it goes there, right? If it gets down there, that's going to be 260 pips you're going to make, right? Just for one trade, just set and forget, leave it alone. Put your TP there. Assuming this is where you want to put your TP, I guess you could also look down here a little further, but you can see this area in general has been a pretty big floor. So I tend to be a little bit more conservative on these because I'm not going to like risk giving back a whole bunch of profit just to squeeze an extra like 10 pips out of the market. It's not worth it. Take the biggest chunk of it, and uh, you know, at that point, either close the trade in profit or at least trail your stop loss so that you're not, giving back a whole bunch of what you made in case you're not in front of the charts and all of a sudden you get a big reversal off of a level and you come back and you're like, geez, I just gave back half my money. And that happens a lot. So that's where you either have to just put a TP in place, a reasonable one, or like I said, at least put a trailing stop in place so that that your stop loss order will follow it down at a predefined amount that you set to keep it a certain distance away from the current price. And if there is a strong reversal, it'll take you out at that point, but at least it'll lock in most of your profit. So, all right. The other, I also had gotten a signal this morning on the the euro New Zealand dollar. So just kind of the reverse. So we must have some weakness in the New Zealand dollar because I also had a signal. Now here again, the 3-day chart, we had this signal, this defined crossover back here at this candle right here. You can see that was back on March 23rd, which was just over a week ago. And so if we measure where we would be at on that right now, so here was the close right at the top of this little indecision candle, take it up to where we are right now currently, and that's 335 pips in basically 1, 2, 3, 4, and basically 12 days. So, 2+ trading weeks. For one trade, just set and forget. And, if you did that on a full lot, that would be a pretty significant amount of pips. Um, but obviously you got to, do it based on your account size. So, and how much risk you're willing to take on. All right. So that is the kind of the beauty of this indicator. And again, the longer you stretch it out, the more the more quality your signal should be, and the more smooth the chart should get. There's always going to be choppy times on any time frame, like in here, because you can see the price kind of move sideways here for quite a while. This is a long time here. This is basically the middle of August 2023 until the beginning of January 25. So this is like a year and a half from here to this high or around this area. So, you're going to get some of this, but some of this is still tradable. I mean, there are still some good signals here. They're just not long-term signals, but we had a buy order here, we had a sell order here, and if you look at where these crossovers are based on the price, those are legit trades. We had another buy order here, right? So even in the sideways market, you can still, you can still get some pretty decent trades because again, you're stretching out the time frame. So, um, whether you're holding that trade for several days or for several weeks, there's still good trades in here. Okay, even in a sideways market. So, just clicking through these very quickly again. Um, I just basically say, no setup, or watch list. I just basically create two lists. I create in my journal a watch list. So ones that maybe are heading towards a setup, but there's not a clear direction. Maybe the lines are just starting to come together, but the question is, are they going to just bounce off of each other and continue the existing trend, or are they going to cross over and cause a reversal? So I would say with CAD Swiss, there's nothing right now. Um, Nothing here with, I got to move this out of the way. How come this is not moving? There it goes. Aussie CAD, I would say probably nothing right now. We did have this little bearish, this, yeah, bearish deflection here on pound Canadian. I'd be a little bit more apt on this if this blue line, which is the Canadian dollar, were pointing up, because that, looks like the pound down and the CAD up. That would, trigger a nice short here. So not really too thrilled about this one, but something to watch maybe. This one here, US CAD, obviously long. This triggered a while ago. I'm actually still in this trade on my funded account. So this one here, Euro dollar, this is an example where, there's, they're both heading up. So there's no trade right now. We did have this sell right here, but you can see uh, both lines heading upward. So this is basically saying there's strength in the euro and the dollar. And you can see what that's triggering. So there was an initial little sell off right here. But now for the last, week plus here, again, this is a 2-day chart. So this is more like 3 weeks. This 3-day chart. We've been, moving in a range because both currencies are strengthening. And that's going to cause, in most cases, sideways price action. So this indicator can also help keep you out of bad trades too, right here. Okay. Euro Swiss looks like we have a bullish crossover on this, and I'm actually in this trade too. Dollar Swiss, we have this bullish crossover. I do have an alert still sitting here. It hasn't triggered yet because this is a late entry, but it's not too late. So we have a lot of congestion here. But if it looks like we're starting to get another bullish push up here, I'd probably would think about a long there, even though it's a little late. Euro Aussie, nothing really here right now, but I'll watch this. These are kind of starting to come together. And a lot of times after you see a really big separation like this, all right, this just means indicates a very strong trending market. And you can see it's going straight down. When they start to come back together, that usually indicates at least a pullback, which is what we're seeing now, right? One coming up, one coming down and approaching each other. And so you have to just see when they come together. Do you get a strong crossover where that indicates a reversal? Or is it that magnet theory where you put two magnets together with the poles matched up and they tend to push off of each other? So you see these come together and then reverse and continue the downtrend. So there's nothing there to do with that right now, but it's something to watch. Potential bullish crossover on Euro Canadian. Okay. right here, and this one is pretty live right now. I think I have that. Yeah, that's on my list. Nothing on pound Aussie. I'm just going to go through it because we're not talking about futures today at all. This is an old trade here on the pound versus the New Zealand dollar. This was our entry candle back here. And again, if you were in that trade, um, you would be up about almost 400 pips. The pound Kiwi is a big pip maker. So that's 400 pips in 1, 2, 3, 4, 5, 6, 18. So it's about 3 weeks. Okay. Just letting that thing stew and keep moving up. Same thing on Euro Kiwi. They're very closely correlated. Nothing on the pound dollar. New Zealand, Aussie US dollar. This is one I need to put on my, it's already on my watch list because we have these two lines kind of like coming together here after a big run up. So again, the question is going to be, you know, does this US dollar line continue to push up and the Aussie kind of cross down, in which case that would confirm this downtrend that looks like it's starting to form? Or, is this just a big correction and we get the US dollar to point down, the Aussie to start heading back up? I'm more leaning towards the bearish aspect of this, especially fundamentally for the US dollar, but it's on my watch list because of what it's doing right now. That once they come together like this is, where you want to start to keep an eye on things. New Zealand dollar, US dollar, we already talked about. The CAD yen, nothing really to do on this yen. They are trying to approach each other, so we'll see. We have some bearish price action, but we still are in an uptrend here. We had a clear new high made, and so this one is, yes, that's also on my watch list. The Aussie yen is kind of the same way. All the yen pairs are pretty much looking the same. Some are just probably closer than other. Now, this is an interesting one. New Zealand yen, and I'm actually in this one already. New Zealand yen short. This one already crossed over right here. This happened last week, last Thursday, March 26th. We had this crossover, and we are heading down. If you look at just price action too, right? You don't trade this indicator in a vacuum. But we had this big bearish candle right here after this little run up, and then we put in this lower high right here. Price failed multiple, again, 3-day chart. So this is like 12 days. This is more than 2 weeks. Price just chopped around at these highs and failed to go any higher. And then it finally rolled over and broke this support right here. So this is pretty bearish to me. And the indicator is telling you that. Euro yen, again, sideways price action. Again, there was a bullish crossover here after a little bearish crossover, but now you can see you got both of them heading up. So this, if you're looking to take a yen trade, this is not the one, at least not right now, because you can see they're both heading up, and that is causing a prolonged sideways price action. Again, remember, this is a 3-day chart. So this is weeks right here of this thing just doing nothing. And you can see the perspective when you go out to a higher time frame. That's like, do I want to be trading just in this chop? No, absolutely not. I want to trade stuff like this. I don't want to trade this. Ultimately, this may roll over and go down, but if the yen continues to strengthen, it will. But if the euro is also gaining strength, then it's not. It's just going to continue to move sideways. Swiss yen, I'm in Swiss yen. It's been a little frustrating because I was expecting this one to roll over too. But you can see yes, the yen has strengthened and the Swiss has weakened a little bit, but it's kind of flatlined right now. So I'm sitting at around break even on this trade. I'm thinking about, maybe closing it, but I may hold on to it a little bit longer. It went into pretty big drawdown and now it's back to near about break even. But again, remember the Swiss and the yen, this is an unusual pair because it's kind of like two safe haven currencies. When this trends, it does really nice and it can really sustain trends for a long time. But um, when you get a little bit of indecision now, it can be a little bit difficult. So I'll keep an eye on. I'm holding it for now, just because it looks like we failed to break the new highs back here a few weeks ago, chopped around again for many days at this high, and then rolled over. But we've got obviously a lot of buyers sitting around this 190, 198 area that it's a little resident to go below, but I'm hoping we can still break that. And then so I'm gonna just hold that short for now. US dollar yen, nothing. Pound Swiss. They're together, so yeah, that's on my list, my watch list. But they're both heading down. There's no cross. There's nothing really for me to do here. But the fact that they're intertwined here, at some point there'll be a diversion away, and then maybe there'll be a trade after that. But it's on my watch list. Aussie Swiss, not really anything there. These are not great pairs. These Aussie, New Zealand, Swiss. They don't make a lot of pips, and they can be very range bound. Although they've trended lately. New Zealand, Swiss, both weakening, so nothing there. And Aussie, New Zealand dollar. I'm in this one long. However, it's been a little bit because I originally took this, I think, off of a was it the weekly chart? I think when I was looking at no, it wasn't the weekly. I'm trying to find. I think maybe it was here on the daily chart. I took this long. But on the 3 day, it doesn't look as impressive because they never really came together. So again, it just depends what time frame you're using. But I'm still in this, and I'm going to hold it for now. But this little bend down in the Aussie here is a little concerning. The New Zealand dollar is definitely bearish right now, but the Aussie and the Kiwi are very closely correlated. Not only are those two countries obviously right next to each other, but they share a lot of the commonalities of what drives their economies. And so it doesn't always mean that they go in the same direction because obviously this is a currency pair and you can see, big trends like this, which means, that's divergent strength that drives something like this. Um, so it doesn't mean they're always going to go in the same direction, but when they do start kind of running together, you can get, definitely some prolonged sideways action here too. So it's one I'm watching. I'm in it right now. It's not a pair I trade much, but like I said, I'm in it right now. We'll see what happens. So yeah, so that's it, guys. I just want to kind of do a little bit of an update, talk a little bit more about time frames. Again, if anyone's interested in this indicator, again, it's not anything you're going to find on TradingView. A video I did like about a week ago, I talked about the original time frame. The original indicator I took this from, which is a publicly available indicator on TradingView, and then I just had it reworked and coded so that it's only showing the two currencies I'm looking at that moment, which is much better than the other one. To me, the other one's not usable at all because it's just too noisy. So this is really nice. So if you're interested, let me know. I said I don't have any affiliation. I'm not selling it myself. Um, but I maybe, can connect you with the person who created it, and then you can deal with them directly. So, like I said, I don't sell anything on this channel. I have no intention of doing that, and so I'm holding to that. So, all right. So I hope everybody has a great weekend. Like I said, the trading volume today, there was a little bit because of the US dollar news, but overall it's been pretty quiet. And don't expect a lot. Now that we're approaching noontime, things will really dry up. Not only is it Friday, but it's a holiday Friday too. So we'll be back at it next week and look at some of the future stuff and see what I'm going to do with that corn trade that's sitting there open. All right. Smash the like button, subscribe to the channel. Have a great weekend, and I'll talk to you all soon.